Ladies and gentlemen, welcome back to the channel. Today is what you would call one of those rough days as a Tesla stock investor, and there's going to be many of those to come. Let's just be honest, over your investment lifetime in Tesla, there's going to be bad days, and today was definitely a bad day. Now, from my perspective, from a technical perspective, we will go over what's going on with Tesla stock, how long we can expect Tesla to be, quote, down in the dumps, if you will, and what's going on in our markets, because it's not just Tesla. You're having one of the worst days for the S&P in many, many months, and, well, maybe there could be more worse days to go. Maybe this is not the worst day we're going to see over the next couple of weeks, with the political uncertainty really starting to ramp up, including a speech from Joe Biden that's supposed to be happening tonight, right now, when this video is coming out at 8 p.m. And what's weird is yesterday we actually had a video of Joe Biden like getting off of onto Air Force One, but AI companies were saying that was a fake video clip. So there's so many weird things going on right now. We just don't know. We heard there was a medical emergency. We haven't, heard anything else in regards to the resignation. It wasn't signed with the presidential, seal. There's a lot of weird things going on right now. And I'm just going to be honest with you guys. When there's weird things going on, stocks do not tend to like it. You're also heading into the rest of earnings season, and Tesla and Google were just the star of big tech earnings, and it looks like expectations may just be too high for this earnings season, specifically in regards to AI. So we'll talk about that. We do have some data coming out tomorrow that will be impactful specifically for markets. And the former New York Fed president that is calling on the Fed to cut rates, not in September, but next week, citing that there are growing odds of a recession if the Fed even waits until September to start cutting rates. So first and foremost, what's going on with Tesla? It's actually pretty straightforward. The earnings came in a bit of a mixed bag. That did not matter, but we did not get new updates on the robotaxi, no guidance for the robotaxi, and it's officially delayed until October 10th. That's not great. Not the end of the world. We kind of expected that already, right? We went into that precondition for that, but we did not get any new information about new models either. And if we're expecting those to launch in the beginning of 2025, you probably need to start, showing the markets these models and let the analyst model what this will do for Tesla demand, Tesla deliveries over the coming years. We did not get that. And it looks like Tesla will do an actual product unveil to show us these new models at some point down the line that we just don't know of. So really, long story short, what happened with Tesla is expectations were we would get new information. We would get good news for the robotaxi event. We would get maybe possibly an unveil or more details about these next gen lower price models. That did not happen. And in the near term, there's just not much left to, carry Tesla stock higher from a momentum perspective. And that's why you're seeing some of the momentum give up today with Tesla stock that was down about 10%. I just want to be very clear about this yet again. It does not change the bull thesis on Tesla, what we've seen over the past 24 hours. Nothing changed in that regard. The timeline is just a little murkier now. The robotaxi event is the big deal, but we already kind of got guidance that maybe the robotaxi starts in 2025, maybe not. You really need to be a long-term investor in Tesla if you are investing in Tesla right now, because there's not a lot of certainty on any of these things. We know they're going to be successful. We know they will eventually happen, but timelines, it's just not Tesla's strong suit. As long as the economy avoids a recession, the Fed starts to cut rates and do as the markets are pricing in, cut rates 3 times this year. With no recession, I would expect Tesla stock could still hit new all-time highs by the end of this year, following after the robo-taxi event. I'm not changing my timeline on that just because Tesla stock fell a little bit. I still think that's a reasonable conclusion, especially, again, during election years. Post-election, you tend to see a pretty aggressive rally in markets. But from now until the election, you tend to get some downside. And, we really haven't seen much downside relative to the political uncertainty we have, relative to the rally that we have seen. I mean, you got a 6% pullback back in the spring. Currently, following today's almost 2% drop in the S&P, you are from top to now only in about a 3.85% pullback. Like, this is nothing still. The average correction is 13% during an election year. If you do fall 13%, that's going to put you almost perfectly in alignment with this 200-day moving average at about 493. And that is a possibility over the next coming weeks, especially as we start to get more big tech names that will report earnings. Now, big tech broadly sold off today, which carried the S&P and the NASDAQ lower, whereas IWM, relatively speaking, outperformed. You had Apple down 3%, NVIDIA down almost 5%, Google down over 5%, Microsoft down about 3%. There was definitely a reset to expectations within big tech today, but the expectations are still just too high, especially around AI, because Wall Street wants AI returns. They want AI, ROI now, and that's just not going to happen. Google basically told us we are in the early stages of this. We're still trying to figure out how to monetize AI and what, services or products are going to be best suited for enterprise or for personal use. Like, there's not a lot of certainty in AI. For a quarter in which AI expectations are super high, that does likely set you up for further disappointments this earnings season. But as I have said many of times before, the kryptonite to Tesla and really our broader markets is the economy. If the economy holds up, continues to do well, we get some cuts from the Fed, that's going to be fantastic. Stocks are going to do well. All will be fine. If the economy continues to weaken and accelerates this weakening, then you have a much bigger problem on our hands. Then people are going to start to bring up that recession word, and you'll start pricing in a recession, and that will lower markets dramatically. Now, I don't think we're at that point, but tomorrow's data will be important in potentially shifting us more towards the soft landing or more towards potentially some economic problems. That's because tomorrow morning we will get durable goods orders month over month for the month of June. We're expecting positive 0.3%. Last month we came in at 0.1%, so expectations are that durable goods orders got quite a bit better in the month of June compared to May. But you will get the GDP growth rate quarter over quarter advanced estimates for Q2. Current estimates are around 2.5%, so expectations are high. And what happened last quarter is you got a big downside surprise. Expectations were roughly around 2.5%. That initial GDP report came in at 1.3%. If you get something similar to that, then I think the markets might start to grow a little more concerned about the economy. Now, this is only the first estimate for Q2 GDP. There's going to be 2 other estimates coming out over the next 2 months or so. So it's not going to be a foregone conclusion of anything tomorrow, but it's going to give the markets new information, specifically how the economy is doing. Now, another big thing we want to watch is initial jobless claims, because this has recently spiked, kind of came down, and it's spiking again. Now, initial jobless claims last week came in at 243,000. We are expecting this could tick up to 247,000. And yeah, this is seen as one of those leading indicators to the economy. If you're seeing 250 or so thousand initial jobless claims being filed in a week period, in a 1 week period, I mean, that could start to show up in some of your non-farm payrolls. That could start to make the jobs numbers look much worse over the coming months. So that's something markets are paying pretty close attention to. You will also get GDP sales quarter over quarter advanced data, core PC prices quarter over quarter advanced data, and continuing jobless claims. Same's true there. You're hitting the highest levels we have seen in the last year for continuing jobless claims, and that's something the markets are also paying very close attention to. Tomorrow morning, we do have the Kansas Fed Composite Index expecting -5. Last month was -8. And Kansas Manufacturing Index last month was -11. And we are expecting -8 8 there. So expecting some lockstep improvement from last month's numbers. And as I reported today, you did have the global composite PMI data, the global manufacturing PMI data, and the global services PMI data that came in a little bit better than expected across the board, but really wasn't anything that's too definitive. It was marginally better. And you can see ex-New York Fed President Bill Dudley says, quote, "I've long been in the higher for longer camp. The facts have changed, so I've changed my mind. The Fed should cut, preferably at next week's policy making meeting." Now, even Nick Timiraos posted this on his X account. He says, Bill Dudley flips from higher for longer hawk to cut now dove. Quote, "I changed my mind. Waiting until September unnecessarily increases the risk of a recession." Even Zero Hedge on X says Bill Dudley, who urged Powell to hike rates in 2019 to crush Trump, flip-flops and demands immediate rate cuts. And whenever you get Nick Timiraos that's tweeting about something, that usually is a pretty good heads up to say the Fed is also aware of that situation. Jerome Powell probably wakes up in the morning and goes to Nick Timiraos' X account. Amit on X says U.S. manufacturing PMI just came in below 50. Above 50 is an expanding economy. Below is contracting. Estimates were for 51. It's time for the Fed to cut. And the odds of a potential cut coming next week are sitting at 5.2%. We do have I believe a Fed speaker or two. Fed Bowman speaks today at 4:05 p.m. And if there is even a remote chance the Fed wants to cut in July, Fed Bowman's going to come out and basically just plainly say that. Now, tomorrow, you don't have any other Fed speakers. I think you're entering the Fed blackout period now where they're not going to be talking, but it is still possible you could get a cut coming next week, but it is the unlikely conclusion right now from the market. But Bill Dudley saying this definitely raises the odds at least a little bit. In terms of CNN's fear and greed indicator, you're sitting at 43, which is barely in fear territory. If we do go through a larger kind of downturn, there's still a lot of room for things to get worse here. If you look at the latest AI investor sentiment survey, it's sitting at 52.7% bullish, 23.8% neutral, and 23.4% bearish. So still, again, a lot of room for people to switch to that bear side, bear camp, if you will, during corrections. That's what you tend to see before that correction actually ends, is you tend to see people capitulate and get bearish. And same is true for the percent of stocks currently trading above their 50-day moving average at 66.83%. Sure, about 2.4% of stocks today fell under their 50-day moving average, but that's a pretty healthy level. Normally, you get down to, 20% of stocks trading above their 50-day moving average, or 30% of stocks trading above their 50-day moving average before corrections tend to end. So from that standpoint, you could only be just in the starting rounds of a corrective phase for our markets. And let's just be honest, stocks are priced for perfection. They're priced for a best case scenario for earnings. They're priced for no political volatility. They're priced for no chance of a recession coming over the next 12 months. I think there is a chance of a recession over the next 12 months. I think there is political uncertainty. I mean, people are questioning if Joe Biden's even alive at this point because we haven't seen him. We haven't heard from him. And that's pretty weird whenever a president steps down to not hear from that individual. So I think you can make a case that there are higher risks than the markets are currently pricing in. And if the markets start to price in those risks, how low could markets go? Again, I think the 50-day, 100-day, and 200-day moving averages are good first steps towards getting a larger correction. Your 50-day moving average at 540, your 100-day moving average at 525 on the SPY, and your 200-day moving average at 493. The 13% correction that you on average see during election years would literally be this 200-day moving average at about 493. Exactly 13%. We're right there at about 13%. So could that happen? Possibly. I mean, that would put you back to where you were after the 6% decline following last quarter's earnings. And I think earnings will be a big story of this, especially considering expectations are so high for big tech. I wouldn't be surprised if that does spur a larger rotation into other areas like your small caps over the coming months. Especially when the Fed starts to cut rates, that's when I would expect Tesla stock to really start to outperform and small caps to really start to outperform as well. But in terms of Tesla specifically, really this downtrending trend line here is very important. Now I have two of them on here because you can point these lines a little bit different, and it does create a little bit of a channel here. And look what happened today. You're right in the middle of, almost in the middle of this channel, sitting at about $220 per share. It looks like Tesla had a lot of support today as well, around 220 after hitting the low of the day around 215. You're actually still holding this uptrending or downtrending line of resistance that has since turned into a little bit of support. This is really the number one technical sign for Tesla. If you can hold this level, then things continue to look really good. Now, unfortunately, I don't think we will hold this level. I think it's likely we do just trend sideways here, maybe into the teens. I'm not expecting any kind of big fall back under $200, but I think, could you fall $20 from here? Could Tesla go down to 200? Could Tesla go down to 210? Could it fall $10, $11 from here? It could. That's a possibility, especially if the markets do get worse and we do go through a larger correction. Now, do I think it makes sense to go out and short Tesla, sell your position in Tesla, or do anything super dramatic? Absolutely not. I think if you have any kind of longer term perspective, just a couple of months, perspective down the line, things are going to look better than they do now, assuming the economy is roughly unchanged. From now until the end of this year, I see a very strong bullish case for Tesla following the robotaxi event into the end of the year. But from now until the election, you're likely to get a larger correction in the markets. The writing is on the wall. I've been talking about this for a while. I posted it on X. It's starting to happen. The best thing you could do is raise some cash, hedge your portfolio if you would like to. That's not financial advice. I'm not a financial advisor. If you guys want to come join the trading community, check out that link down below in the description of this video. But in the near term, it does mean you can see more downside for Tesla stock. Not a guarantee, but it means you're probably more likely to see downside in Tesla. But following, the fall from 271 down to 220, how much downside is left? I don't think there's a lot of downside left by any means. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.